Hey guys, we are into the first week of May, which means we're done with 1/3 of the year for trading. So, I wanted to give an update specifically on how I'm doing with the zero DTE strategy that I do. So, just a quick market recap. As you probably know, the S&P 500 started the year around 4,800. We're down below 4,200 today. That's a 12.4% drop in the market. NASDAQ is doing even worse, started at around 16.5 and we're right around 13,000 now. That's a 19.8% drop. So if you just bought these in SPY or the Qs, you'd be down 12% and 19% in SPY and QQQ. So hopefully you're doing better than that. If you are doing well. So even if you have a down year, that's still better than most people. So looking at my website here, I have a blog for my zero DTE. I update this daily with my trade. These are real trades that I put on. So this is actual results. It's not paper trading, so it's accurate. And you can see I'm up almost $3,000 so far this year. 33.5% capture rate. Average credit around $100, which is higher than normal. But the VIX has been higher than average this year because of the downtrend. So if we look at last year's 2021 premium capture rate of 22.4%. Last year I started out around the 10 delta for the shorts. Now I'm doing only pretty much the 5 delta, and my premium capture rate has actually gone up, which is nice. So with this $3,000, for most years, the average width that I do is around $70 wide on the put. I just did a quick calculation here, and this year my average is 90 points wide. So it uses about $2,000 more in buying power for the way I do it compared to last year. So with this $3,000, using $9,000 as the total capital, I'm at about 31.8% return on capital. So a lot better than the market. At this rate, if I continue this, I'll be around 90% return on capital at the end of the year if things pan out. So just a quick explanation on this. I have the trade date, the SPX, and then I do an Iron Condor, but I always split it out as the put and the call spread separately. I have my short and my long strikes that I pick. The call spread is usually about half the width of the put spread, but for your capital requirement, it's going to be determined on your put spread. So that's why I use $9,000 or $90 wide for that average. And then I have my average credit received on the spread itself. And then I have the short option stop trigger and the stop limit. For the stop trigger, I take whatever I received on just the short leg, and I multiplied that by 3, and then I round up to the nearest dime. And for the long option, I just buy the 5-cent option. So that's how I determine what the width is each day. A lot of people will have a set width. I like to do this. I like to call it a synthetic strangle, where basically this long option is just to reduce the buying power. But I'm really looking to try and receive as much as I can and make this as wide as I can, so that the long option doesn't take away from that short. And then the short option fill. So if I get stopped out, that's where I put this value here. I should note that the stop limit, I always do 40 cents above the stop trigger. I haven't had any issues with that, and I've been trading this for over 2 years now, and I haven't had an issue at all. So that's good. And then this closing debit here, some days this is more of a gut feel. If I get stopped out, if I think it's going to be a choppy day, if I don't think it's going to trend, I'll sell another 5 delta, put or call after I get stopped out. I do this sometimes. I don't do it all the time. So this closing debit is, I received 120 for this 5 delta in this particular case, and this was on Monday. I did that. So that's what the closing debit is, and then I have my total P&L for each day and some of the credits and all that stuff for premium capture rate. So so you can kind of take a look at this. Like I said, it's on my website. It's free. So just to recap, I'm doing a lot better than what the market's doing, looking at about 31.8% return on capital. And then overall, if we look at all of my strategies that I use, we are right on pace with where we were at last year. With 1/3 of the way in last year, total P&L of 15 grand. I am almost 6 grand this year, so doing a little bit better. Premium capture rate just a smidge higher, but right on track. So doing well this year. And a lot of people are asking, how people are doing with this downtrending market. That's the nice thing about options, is you can make money even if the market goes down. So finding a trade that works for you with different market conditions is always a benefit. I have more information on my website if you want to reach out. You can reach out at IncomeOptionsTrading@gmail.com. I'll be happy to get back to you. If you have any questions, leave them in the comments below. Otherwise, thanks for watching, and see you next time.